Yeah, so I think the reason I'm excited about Bitcoin is when you have a disruptive technology, they call it a category killer. Bitcoin's a serial killer. It's going to go through 40 or 50 different industries: well storage, cross-border money movement, property titles, voting rights, identity, and those are all the biggest use cases on Earth.
Good afternoon, everybody. I'm Dan Tapiero, DTAP Capital, GBI, Gold Bullion International. And today I'm happy to be here with an old friend, one of the few guys with a strong macro background who is in the Bitcoin world, Dan Morehead. And I have to say we've known each other probably 20 years, so this might be a little lighthearted chat as well. Now, Dan was the first traditional macro fund manager to identify the Bitcoin opportunity. And just so that the audience understands what that means is that, you know, the macro world that we are in is filled with some of the greatest investors of all time: George Soros, Julian Robertson, who we both worked for. And Dan was the sole manager in this space to identify it and execute on it in that world. And of course, others followed, some of our contemporaries as well. But I think generally, as a macro guy and looking out at the Bitcoin world, Dan is one of the guys on the Mount Olympus. I know I said that the other day and you chuckled a little bit, but from our perspective, the guys who saw the opportunity but didn't execute and transact on it, Dan really sort of led the way. So with great pleasure, I introduce Dan Morehead. Dan?
It's great to be here. Thanks.
Yeah. So why don't we just talk about that initial moment? There's a lot of, you've done a few interviews and I've watched them, and I don't want to go over the same stuff, like what was your Bitcoin moment, but in a way, having your macro background, what in that allowed you to see that Bitcoin was a great opportunity?
Yeah, so in macro, we're always traveling around the world looking for asymmetric opportunities,
Yeah.
You put $1 in, you might be able to make, 5 or 10, but you can only risk 1. And there are a few of those that come along. Every 3 or 4 years, there's something like Russian privatization or, Argentine farmland or Tesla Motors. There's a trade like that that comes up. And that's been a fun experience at Tiger and my career before that, looking around for those things. And then in 2011, my brother introduced me to Bitcoin.
Right.
And it took a while to get my head around it. I read, there was only a few things on the white paper, and the Wikipedia was like a half a page. And I thought, oh yeah, that's a really great idea. I hope it happens. But I didn't really do much about it. And the funny bit is that was back when they were giving away free Bitcoins. Gavin Andreessen, who was the chief scientist of Bitcoin, had a thing called the Bitcoin faucet, and all you had to do was log in and you get free Bitcoins. That's how funky and early that thing was.
Yeah.
And then in 2013, Pete Brigger of Fortress and Mike Novogratz, who I'd worked with and gone to school with, called and said, "Hey, we're starting to think about Bitcoin. You want to have a coffee and talk about it?" And after about an hour, my head was starting to spin, and I basically just focused on it for the next 3 or 4 months, didn't do anything else other than read about Bitcoin. And I came to believe it's the biggest trade of our generation, so, I'm all in.
Yeah, but how did you, I understand you did the digging, but there are a lot of macro guys, just as smart. They didn't quite make that adjustment. They couldn't quite see it. Bitcoin to me is different than those other macro opportunities because you could still use a traditional macro framework for understanding it. And yes, asymmetric risk reward, et cetera. But what was it that sort of pushed you over?
Yeah, so I think the reason I'm excited about Bitcoin is when you have a disruptive technology, they call it a category killer. Bitcoin's a serial killer. It's going to go through 40 or 50 different industries: well storage, cross-border money movement, property titles, voting rights, identity. And those are all the biggest use cases on Earth. And if you think about somebody who invents like a new medical device, and there's only 100,000 people on Earth that have that condition, it's pretty capped on what that medical device is worth. This is going after the biggest things: 300 billion of electronic payments, remittance, wealth storage, gold, as you're well aware, $7 trillion market cap. And even currency. Currency's $100 trillion market cap. And all of the cryptocurrencies combined are $250 billion. And that's the leverage I'm talking about. You're starting with such a small base against an enormous opportunity. And even if blockchain fails at 10 of those use cases, there's still 40 other use cases it's really good at. And that's why I think it's the trade of a generation.
Yeah, but why do so many smart guys still resist it? And I mean, I could go through various examples. One of my old mentors even went on TV a month or two ago and said, I just don't, guy in his late 60s, very well known, I just don't get it. I want no part of it.
Yeah, so there's one of the rationales is we already have a currency, the US dollar. Why do we need another currency? And my argument to that would be, yes, you and I live in the United States. We have a solid financial system. We have a currency that only depreciates 90% over the last 80 years. So it's not as bad as some of the other currencies out there. But keep in mind, there's 200 currencies on Earth. And so Bitcoin's just 201, right? There's a lot of people.
But a global macro guy should get that.
You would
What's stopping them? The crowd, right? Our old crowd.
6 billion people live in countries with really crappy currencies, right? And they would be vastly benefited by using Bitcoin or another cryptocurrency. Sometimes I think people just kind of resent something that's an asymmetric trade that they missed, and maybe this is a bit of a West Coast, East Coast thing. Like every Lyft driver in California is talking crypto, and Wall Street people are probably more negative than people on the West Coast.
Right, and that's where traditionally the financial macro guys have been and are. So that's interesting. Is that also an age divide thing?
Oh, I think there's a big age divide. Obviously, millennials have grown up Venmo and everything, and totally living on their phone, and mobile money makes sense to them. And then the older generation might be a bit more reactionary. And a good example of the kind of negative opinion from very famous investors, Warren Buffett has been, fantastic investor, but on Bitcoin, he's been super negative. He likes to call it rat poison. That's
right.
He's
still rat poisoning.
Caught up, but at least a year ago, he's still doing it. And my point would be, when he first said that, Bitcoin was trading at $200. It's now at 10,000. I don't think it's 100% certainty that Bitcoin was going to go up at $200, and even here, I don't think it's 100% certain it's going to go up.
Right.
But on a risk-adjusted basis, it's a fantastic trade. Because if you say it's a bad trade at 200 and it actually goes to 10,000, you needed to be 99% sure it was going to go to zero when it was at 200 to have it not be a rational trade. And that's my view. Is it's speculative. It could certainly go down. It's had some periods where it goes down 80% in 6 months, but it could go up 10x, 50x, numbers you just don't see in any other asset. And that's the asymmetry that I think makes this a great trade.
Yeah, I mean, people in this space talk a lot about adoption. That's why I was asking you about when can we get some of these smarter guys. President Xi of China comes on TV and he says, well, we're going to be the leaders in blockchain technology, then goes up 30%. I don't like attributing news to movement in Bitcoin. I think that's kind of, the trade. But that was a very supportive comment. So we talk about adoption a lot in the space. What's going to be, that Netscape moment where guys go, aha?
Yeah, so a common thing for the negative people on Bitcoin is like, hey, there's no killer app of Bitcoin.
Yeah.
And there's really two answers to that. The first half ironic answer is, well, Bitcoin's the killer app of Bitcoin.
Yeah.
It's already storing $200 billion of wealth.
Right.
It's been doing it great for 11 years. It's 24/7 uptime, never been counterfeited, never been hacked. That's the combined value of all the sexy unicorns together, right? Like Lyft, Uber, whatever, WeWork, add it all up.
WeWork disappeared.
Well, it's 7 billion still. So you add up all those supposedly amazing apps, it's still less than Bitcoin. So Bitcoin's doing a great job already. And even when the detractors say, oh, it's just digital gold, well, if that's its worst case, that's amazing, right?
Right.
It's a 7 trillion market, right? That's fine. And so that's at least the first layer. But when you peel that onion back, it's really already working great for cross-border money movement. In the US, our systems work great. My REI card gives me 1% cash back, so I don't think the system's broken. But if you don't live in a developed economy, the system's totally broken. Like if you live In an emerging market country, you know your currency is depreciating and it's very hard to move money around. And so in the developing world, Bitcoin's already very well used. I'm on the board, I recently left the board of BitPesa in Africa.
Sure.
It's now doing $150 million a month of business helping people move money around Africa with Bitcoin. And the funny surprise, when we started the company, we thought it was all about remittance, $300, $500. They have huge multinationals using it because it's so hard to move money around Africa in the banking
Is
system.
that right? Like
Yeah.
which ones? That's
Can't-
interesting.
but it's like top 10.
Okay.
It's like
Oh,
top
really?
10 multinationals because the
Wow.
banking system is so difficult. The regulations, it's very expensive.
Right.
There's only 2 correspondent banks on earth that can move money into or out of the 29 countries of Africa. So it's really expensive. The remittance cost into Africa is 12%. So if you have a migrant working in the United States, they spend more than a month working for their remittance company, and their family only gets 10 and a half months of their wages. It's very expensive. And the other example would be we just sold a company called Coins.ph in the Philippines. They have 1 out of every 10 adults as a client. That's already totally real. It's totally happening.
Yeah.
And that'd be a great example of the future of money. There are 3 times as many Filipinos with a Facebook account as with a bank account. And honestly, that's where we're heading. That people are used to dealing online, on their phone, and the future of money is on a phone rather than with some big ionic column marble bank branch, built into every 10,000 islands of the Philippines.
Right, where you worked for years before Tiger, right?
Yep.
That's a nice segue into Libra. I mean, you mentioned Facebook and Libra and Calibra.
Yeah.
So do you think that's the future?
Oh, I think that is definitely the future, to have a global, essentially stable coin, a token that doesn't have the volatility that Bitcoin or ETH or XRP has. There's definitely use cases that, Bitcoin, ETH, XRP are going to do some amazing things, but the global consumer wants something that's not crazy volatility, something pegged to a basket of currencies. And I think David Marcus at Facebook did a great job creating Libra and all the partners that came together. It's a brilliant design. I think they walked a fine line between being totally centralized, walled garden, like the data monopolists are doing in most of the businesses, and that's very difficult to get through. That would be DOA, basically. And then on the other extreme would be totally decentralized, which is really hard to organize and probably would never get off the ground. So they did a federated system where 100 different entities will stand this thing up and then over time decentralize it. Facebook's only one of those 100, so they're taking an enormous amount of the attention, but they're only 1% of the ownership of Libra, so it's going to be a very broad constituent group. And I think they did a genius job picking a basket of currencies. Most stablecoins are backed by the US dollar, a few are backed by gold, but this is the first one, at least I'm aware of, where they picked 4 or 5 currencies, the dollar, the euro, the oldest currency on earth, the British pound, and one of the oldest currencies, the yen. And it gives everybody on earth a currency that's pretty stable relative to their own currency. So they don't really have to think about it. They can store a couple $100 in Libra, and then if they need to buy something, from a foreign merchant, or if they want to do an Airbnb purchase in another country, they can use that as a global payment system.
Yeah, do you think they'll incorporate Bitcoin in there, even, 5% or 3%?
Oh, that's a good question. I don't think there's any current plans to do that. In reality, I think they didn't do themselves as, by calling it a brand new currency, really got the regulators, to hyperventilate. It's really just a money market fund with a little IOU depository thing attached to it. And I think it's funny that Franklin Templeton announced a money market fund that's on the blockchain, and essentially nobody cared. When Facebook announced something that's just a 4-currency money market fund, but they called it a new global currency, everyone went crazy.
And I guess that leads into the next thing about regulation. Everyone goes crazy just on a buzzword. So how do you see regulation developing? It seems to be more intrusive in the US and less so other places. Want to talk about how you see that developing?
Yeah, so there was a great line that the former chairman of the CFTC, Christian Carlos, said at our conference a couple weeks ago in San Francisco. He called Libra and then the Chinese announcement the Sputnik moment for global currency.
Right.
And I really think that's a great line. And for the youngsters out there, Sputnik was when the Soviets launched a rocket, and the U.S. was way behind in the so-called space race, and really got the entire government, Eisenhower and then Kennedy, to engage. And I think we're there now. Facebook's put us on notice that they're going to launch a global payment system / currency, and then the Chinese announced essentially a similar and competitive venture. And so it is essentially game on for blockchain. And I think that Facebook's announcement's fantastic because it basically started the clock ticking. Somebody has to get this done, whether it's Libra or something like it, or even the Chinese version. Somebody will get this done in the next couple of years. And I think it is, I'd love to see the United States continue in the lead. The U.S. basically led the development of the internet. We should hopefully lead the development of a global currency.
Oh, so you think that's where we're heading? We're heading towards a global currency in some form or another.
I think so. There's a great line I've always loved from the Watergate era. Haldeman told the White House counsel, once the toothpaste gets out of the tube, it's going to be really hard to put it back in.
Right.
And Satoshi got blockchain out of the tube.
Yeah.
And I kind of feel like regulators right now are trying to stuff that toothpaste back in the tube, and it's out. So it's game on. Somebody's going to do it. There will be, I think, a handful. I'm not a maximalist. There's just going to be one global currency. I think there's going to be a single-digit number of global currencies. There's going to be probably the existing ones, Bitcoin, Ethereum, XRP, but there will be some stable coins like Circle's USDC or Libra, and then obviously there's going to be a Chinese version of those.
Yeah, but what about other countries getting involved? I mean, the market now is still relatively small. I mean, if you think the entire market cap, including the value of the equity, the altcoins, it's close to 400 billion. Big number versus what it was. But does a Russia get involved? Does the EU decide that they want to get involved? What's the chance that you have some other countries really start to focus on it, and that it really is a global Sputnik moment?
I think you're right, is that it's now game on. All the countries are going to try and figure out their digital currency strategy. But digital currencies don't make things better just by being digital. Russia's announced a bit ruble.
Okay.
It's probably going to be as episodically terrible as the ruble, right? So by just making it a token doesn't make it something you'd want to store your global currency reserves in. So tokenization has only a few advantages. One is speed of transfer, and in the U.S., FedWire is 3 hours, right? It's pretty antiquated. So there are countries like Korea where you can do domestic payment in like 2 nanoseconds, whereas in the U.S. it's 3 hours. So even if you want to send, your counterparty, $1 million, it would still take you 3 hours to get it done. So a token can do it in seconds. That's great. And the other one is borderlessness. U.S. FedWire only works in the United States. If you want to send money to Japan, it doesn't work, right? So then you have to click into SWIFT or some other, really slow system. And so those are really the two principal advantages, borderlessness and speed. The principal value still of what's backing it, like US dollars or a basket like in Libra, I think is what people are going to be comfortable with rather than, getting some new currency like the bit ruble. I don't think it's going to be a huge...
Right. But, I often say that, if Bitcoin is 20 things, digital gold, for instance, is just one of those 20, or payments is another one. So what about the whole concept of programmable money, or the leverage off of the security network? How do you think some of those things, projects in those spaces are looking, and what do you see in the future?
Yeah, it's really exciting. So
I guess other use cases in a way is.
Yeah, Bitcoin has, kind of the collective communities decided to keep it very stable, not change it, which is an advantage if you're storing a couple $100 billion of wealth in it, but disadvantage if you want to do kind of higher order things like smart contracts. So Ethereum has essentially taken that use case, and it is, like you said, programmable money, so you can do really cool things where you have conditional payments that only a computer is activating. So you take out all those middlemen, the escrow agents, the casinos, all the people that take a rake from helping conditional payments be processed. And those have not been as successful as people had hoped, essentially because of the very small throughput of both the Bitcoin blockchain and the Ethereum blockchain. Each of those can do about 7 transactions per second. And so,
but what about Lightning and sort of some of these things? I mean, haven't we gone beyond that?
Yeah, so we're just now there.
Okay.
And so the way I would say it is, 4 or 5 years ago, Bitcoin was going to change the world. And then it got to 7 transactions per second, and it got capped out, and then we started paying $20 for a Bitcoin transaction, and that was essentially what we're trying to get away from, is paying huge fees to do transactions. So we've had 3 years of stalled growth in the ecosystem where we're capped at a certain number of transactions per second, and there's a dozen really cool projects like Lightning and Arbitrum and Starkware, BloxRoute that are building either solutions on top of the existing blockchains, layer 2 solutions, or BloxRoutes is called the layer 0 because it's below the blockchain itself. And each of those is trying to scale blockchains orders of magnitude, like 100x, 1,000x. A couple of years ago, it was all just an idea and a hope. Now it's code. BloxRoute's actually really ready to go live. The other ones are in testing, so going to go live in the next, say, 6 months. And that, to me, is the biggest news in blockchain right now, is that we've had this frustrating period where you build these really cool apps that just actually have terrible user experience because they're just too slow. Where in probably a year's time, if you're pumping through 100 times more transactions than we are now, things like Augur and other projects that really need higher throughput to be useful will really take off.
But what about the non-payment uses?
Yeah, so there's, obviously cross-border money movement's broken, so that's where it's taking off. There's a lot of non-payment use cases coming. A lot of those are still stymied, like, gambling and, all the other cool things that smart contracts can do, just because Ethereum can't pump through enough transactions to make the user experience great. And then there's all kinds of things like property titles, mortgages on the blockchain, identity, but those are going to take a while to roll out. Those, for either bureaucratic reasons or adoption reasons, they'll take a decade for some of those to roll out.
Yeah, I mean, I'm asking about this because you're generally known as one of the most prolific investors in the ecosystem, and I think a lot of the people who don't understand Bitcoin or who are nowhere in terms of adoption, they don't quite understand that there is this entire world that has grown up around the Bitcoin invention, is what I would call it, and that there are literally tens of thousands of super high quality young people in the space building all kinds of interesting things. So maybe talk about some of those projects, some of the things you're most excited about.
Yeah, so right now the stuff we're investing in, scalability is really paramount. So we've invested in a handful of projects that are going to help pump more transactions through these main blockchains. BloxRoute is a fantastic project. Starkware, Arbitrum, those are the ones that are going to be able to allow the existing blockchains to do much higher throughput. The other big theme, we're still investing in exchanges. There'll come a day where everyone's being paid by their employer in crypto, and they can pay for groceries in crypto, but that's not yet. Right. In order to get crypto, you have to go through an exchange. So we've most recently invested in Bakkt, which the Intercontinental Exchange, the parent company of NICE, New York Stock Exchange, has done. They've just gone live with a fascinating set of products. It's the first daily physical settle future in the world. You can do daily futures that if you let it go to expiry, which is the end of the day, you get delivered Bitcoin. And that is just, I think, a really cool hybrid of all the benefits of futures. So for those people who don't want to take delivery, they just want to trade something and cash it out. It's just a futures contract, but people that actually want to end up owning Bitcoin can use that. And especially on the flip side, retailers, merchants can use that to cash in whatever Bitcoin they're taking at their point of sale in for US dollars. So say if you're one of the back partners is Starbucks, they're a US-based company, they report earnings in dollars, so when they sell a coffee in Japan, they immediately convert the yen back into dollars. They need to do the same with Bitcoin. Bitcoin's just another one of their foreign currencies. And so on Bakkt, they can essentially send their Bitcoin and at the end of the day cash out and get back into US dollars. And I think that's going to allow a greater adoption of merchants to start taking Bitcoin.
Yeah, that's, I guess, on the retail level. What do you think about and I don't know if you've read the Safadine Amos book, The Bitcoin Standard. I mean, I'm sure
I've heard
at
him
some point.
speak. He's a fun speaker.
Yeah. Well, this concept that it's going to be it's not really for payments, retail payments, but it's more that it'll end up being the final settlement layer, that it'll be the architecture underneath all of the payment, the money movement rails for everything around the world. So that argument is really that, don't worry about scalability. It's a store of value, and at some point when the value is high enough, it will become used more.
Yeah.
But that it's true because of its intense security properties, that will be its true use.
No, I do. I like that argument that it's going to be the kind of interoperability layer for moving money around.
Yeah.
And I don't think it's ever going to be on the board at Starbucks, right? You're never going to see the prices in Satoshis, right? Because everyone has their own local native currency. And even if a Bitcoin or another blockchain is massively used around the world, trillions of dollars of market cap and all that stuff, you and I bumped into each other at Starbucks on the way here, it's still going to be in US dollars, and in Japan, it's still going to be in yen, because not enough people even have Bitcoin or whichever currency they would be using. And so it's impractical to ever quote anything other than the native currency. And then the end issue currently, not 10 years from now, is Bitcoin is such a deflationary currency. Most people don't want to spend it. The first transaction in Bitcoin was Laszlo buying, 2 pizzas for 10,000 Bitcoins.
Yeah.
And so everyone wants to keep talking about that.
Yeah.
But the reality is most people are unwilling to want to part with their Bitcoin. The thing I think about is in 2014, Expedia started taking Bitcoin. So in order to support the system, I made sure, the Pantera, every time we booked any travel, we always paid for it in Bitcoin. I could probably buy the Mandarin Oriental now, right? So that is the thing that dissuades people from wanting to use Bitcoin.
Yeah, but the not counter argument, but there is an argument that at a certain price, most people will be willing to part with it. And I think the sort of Bitcoin maximalist people think, when Bitcoin's $500,000 a Bitcoin, plenty of it will come out.
Yeah.
And I actually think I kind of like that as a framework. People
I agree.
who say that it's put away, so what's the point of it if no one actually uses it and spends it? But then, you said Satoshis, sats, stacks, sats, and all of that whole concept, that could be the way that we think about it.
Yeah, and it's like any other very exponential asset. You probably don't want to spend your Apple stock in 1980, but now that Apple's kind of at an equilibrium and it's not going to go up 10x from here, people want to sell their Apple stock and, buy something with it. And it's the same with Bitcoin, that in 10 years, it's going to be at 500,000 or whatever the number is, where it's at something more of an equilibrium price. I just think right now, you wouldn't want to buy a coffee with Bitcoin because, you might be able to buy a couple coffees next year with it.
Yeah, or Starbucks itself in a few years.
Yeah.
So, as you said, you're all in Bitcoin and the ecosystem. And you've already had huge success. But what keeps you up at night? What's that little worry you have about, the space itself?
Yeah, so I guess I would say the early days, there were a ton of worries.
Yeah.
Like, Bitcoin might get hacked, or,
Yeah.
G7 might outlaw the possession of Bitcoin or whatever. And I think we've really reached escape velocity on most of those issues. And so I don't worry anymore that 20 years from now, blockchain's not going to have been big and important. It definitely will be. The thing I worry about from a business perspective is, maybe we're just drinking too much of the Kool-Aid, and it's going to take a decade or two rather than 3 or 4 years. And as a venture investor, you're writing a check to an entrepreneur who's going to burn through that money over the next couple of years. And if it takes 10, they're going to burn through the money, and we missed it because we're too early. And that's always an interesting question in trading. Is, are you too early on something? But I'm not any more worried about whether blockchain is going to be, relevant.
But couldn't you just avoid that problem a little bit by investing in companies that are more mature in the space?
Somewhat, and then...
you don't have the same risk, the same return profile.
Yeah, and so on the flip side, investing in the tokens themselves, like Bitcoin, there's no cost to carry, there's no expiration date, there's no burn. So you buy Bitcoin, you secure your password and don't look at it for 20 years.
Right.
There is no cost of carry there. So
Right.
the main worry is really just timing, whether, we might be early on this.
That's interesting. It's funny because I hear that argument and I think it has a 10-year track record of being up 300% annualized. And I just think to myself, looking at different funds, if I saw any fund or anything that had a 10-year track record of even 17%, I would be totally like blown away, right? And so there's somehow this, I guess it's cognitive dissonance about it that doesn't compute with people, that it actually is an asset. And so maybe talk about like the development of Bitcoin as an asset within people's portfolio.
Yeah, so I think it's kind of like the other, what are now called asset classes, like EM or commodities. When we started, they weren't asset classes, and they had nothing to do with what we were trading, right?
Right.
I started out as a mortgage trader, and I had no idea what was going on in the oil market. I didn't care, because bonds were completely separate from stocks, and stocks were completely separate from commodities. And then we invented things like the GSCI and your bullion futures to allow people to get access to things that used to be really kind of funky and different. And so with modern portfolio theory, everyone was looking for uncorrelated assets, so much so they all bought the same thing. And the joke of modern portfolio theory is we all ended up with the same portfolio. Yeah. And even the Fed chairman's talking about risk on, risk off, right? Like even, it's now a phrase that is used in business. Because if we all own the same portfolio and some shock to the system happens and everyone wants to reduce their risk by 3%, they're all selling exactly the same stuff. And that's why in shocks, things that are completely uncorrelated in the real world, like timber and the S&P 500, actually both go down together.
Right.
And that's why blockchain is a dream asset. Like you said, it's got an 8-year compound annual growth rate of 235% a year, and it has zero correlation to anything. And that's a dream asset. You should have some of that in your portfolio.
Right, you would think, but it's still, I'm sure you're out there on the road speaking to investors and somehow they're still saying, well, what about Mt. Gox? Or, or I heard it was hacked. I'm like, no, it wasn't hacked. So a big part, I think, of being in this space is education. Yeah. I'm just, in this interview that I did with Real Vision a few months ago, I sort of really stress this. Like the people in the space somehow have to, I don't know, they say Bitcoin has no marketing department and Bitcoin has no CEO, and those are all wonderful things. But somehow somebody has to explain to people in English, in normal, language that they can understand the benefits. And so what have you done on the education front or Pantera? Are you going to endow a school at Princeton, maybe a scholarship, a Bitcoin? You and Novo can get together and do that. What's your thought about that?
Yeah, so that's a great question. That we're evangelizing a whole new asset class, right? Yeah. So we're trying to spread the good news to everyone and get it out there. And there's been a couple of things that were sticking points, if I look back. And, I was out there talking to the top endowments in 2013 saying, hey, buy Pantera Bitcoin Fund because it could go up like 100x. Yeah. And nobody wanted
And it did. No, it went up more than 100x.
No, exactly.
No, what was the number?
No, it's like up 150x.
150x. Okay.
And so
that was a good call.
The two things I learned in hindsight were, if you go to an asset allocator and say, I want to sell you a single stock thing, that's putting a lot of pressure on them, because then they essentially are picking the stock. In this case, it's called Bitcoin, but it puts so much kind of direct heat on them compared to normally they're allocating to whole asset classes. Right. 5 managers that each have 100 things in their portfolio. Right. They get a big diversified thing. You're offering an incredibly concentrated thing. The risk reward in their career is pretty lopsided, right? If they invest in your thing and it really does go up 150x, I'm sure they get some kudos around the office. Yeah. But if it goes to 0, they get fired, right? It was a really bad risk reward, to offer. And the big change there is now there are dozens of different assets to invest in. It's not just Bitcoin anymore. It's, there's probably 30 or so really interesting blockchains that we're invested in.
You mean tokens specifically?
Tokens, different tokens, Ethereum, XRP, whatever,
Yeah,
a bunch
of
of
course.
things now.
Yeah.
So you can build a basket of things. And then the other big one is custody.
Okay.
So when we were out there marketing this thing, there was a point I had 250,000 Bitcoins in my head. And that's pretty edgy,
Whoa.
right?
Oh my gosh.
There wasn't a lot of, Zappo didn't exist, Coinbase didn't exist.
Oh my
So we
goodness.
had to build our own cold storage and all those things.
You never wrote it down.
Yeah,
Just in the head?
I had it backed up here and there, but it was pretty edgy. And now, and so that was the other big line from institutional investors, like, hey, we can't do this until there's totally dialed custody. We're actually there now. That's the great news. Is Bakkt is doing custody. It's insured. Fidelity's doing custody. There's other RSX, Zappo, Coinbase. There's a bunch of people doing very institutional grade custody. And I think that's the huge change. Where if a couple of years ago an endowment said, hey, I want to buy $5 million of Bitcoin and I'm going to do it on some young Bitcoin exchange, and they went to the investment committee with that, they get fired, right?
Right.
If you go in now and say, hey, I want to do it on the New York Stock Exchange's parent Bitcoin exchange, you might not get it through the IC, but you're not going to get fired for saying that.
Talk to me a little bit about the education side. I mean, general to the broader population. Are you involved in that at all? I mean, you're a real spokesman for the space.
So we've taken it as part of our role to be out there and just try and educate the world on blockchain. And so we, we do the things like our summit that we did in San Francisco, getting all of our LPs together, regulators, lawyers, portfolio companies, try and help educate, our LP base. We have 850 LPs, so it's a lot of people
Well
that
done.
we're educating.
Wow. Yeah.
And then on a broader thing, we send out a monthly investor letter. And back in the day, we used to manage $1 billion of normal hedge funds with about 1,000 people on our distribution list. And I was pretty proud of that. Thought that's really cool.
Yeah.
Like you and other of our peers would read it. We have 40,000 people on it now.
No.
So it's just
my
a
goodness.
huge amount of people.
On your monthly letter?
Yeah, on our monthly letter.
40,000?
Yeah. Yeah,
Wow,
we've had
well
it,
done.
it's been read 500,000 times.
Wow.
So,
and you can track these things now. Yeah.
yeah, so that's what we're doing to try and spread
But
the
what about
information.
DC? Because we talked about the Sputnik moment.
Yeah.
And there aren't that many people who can speak to it the way you can. What would be the plan to reach out to them? I mean, or how does, or there is no plan. I don't know.
Oh yeah, I've met with regulators all around the world trying to convince them that this is something big they should address. And there are some countries like Luxembourg, they're very progressive. Their prime ministers visited Pantera a couple of times to see how to make their country better for blockchain.
Presidents?
Prime Minister, of Luxembourg. We actually had a king just recently visit to see how to make his country all on the blockchain.
Is that right?
Yeah, it's really wild.
That's a small country, though.
It's relatively small, but
it's still a king.
It's still a country, yeah.
He put a tie on for that?
Yeah. So to me, that's a sign that things are really changing, that, regulators, heads of state are really trying to get engaged to figure out where this is going. And you're seeing in the U.S., Steve Mnuchin's been, commenting on Bitcoin. Even the president of the United States is tweeting about Bitcoin. He's not totally on message yet, but he's at least talking about it, which is great for visibility. And I think over the next couple of years, every country's going to have to get engaged.
One of the most interesting things about Bitcoin is it might truly be the first global, not just asset, but I can't think of anything that has the ability has the ability to touch every single person, certainly who has a phone. In some ways, some people might say, well, that's replacing, or I don't want to say replacing gold, but gold is probably the only asset that is known by, I don't want to say every single person on the planet, but it certainly has, you think about network effect, everyone knows gold. But Bitcoin has the ability to be more widespread, more understood by a larger population, the whole world. So the global macro background is helpful in understanding it. But so maybe talk a little bit about this transition from gold or how it compares with gold? How do you think about that?
Yeah, I think, the phrase digital gold is fantastic. It's, gold's been great for 5,000 years. And like you said, ubiquitous. Like everyone on Earth recognizes gold and totally understands what it is. Bitcoin's gonna take a long time to even get remotely close to that, but it's a similar concept that it's, a global currency that can be used for transactions anywhere on Earth. But it has some properties that are better than gold, right? Gold's great because it's very dense, but it's not infinitely dense like Bitcoin is.
What do you mean?
Just a password. Like gold's still a physical thing that's, if you have enough of it, it's heavy and it's hard to store and all those things. So
it's actually not hard to store. I know the Bitcoin people love going on this. I have a sales and storage company. It is very, very easy to store. So I'm going to put that, for all the Bitcoin people watching, it is not expensive to store. It's not hard to store. Sorry.
Yeah. So
sorry about that.
So Bitcoin has a lot of the properties gold has. And one of the main ones is, gold has very, very small production relative to the amount that's above ground, right? All the gold that's ever been mined fits into Olympic swimming pools, right? It's a very small amount, and then a couple of percent a year are mined. That's like Bitcoin. Bitcoin right now is mining about 3% of its stock. In 2025, so only 5 years from now, there's going to be 125 years worth of stock above ground, if you will, in Bitcoin. And so then it'll be kind of a fixed quantity. And the world goes back to the gold standard. As soon as we went off the gold standard, all kinds of hyperinflation happened. A bunch of currencies have been, destroyed. Venezuela's going through the worst humanitarian crisis it's ever been caused by something other than a war, which is amazing, right? Economic policy is literally resulting in people dying. So if we went on to a global regime where at least some citizens around the world storing their wealth in Bitcoin, people would be better off.
Yeah, I saw some story somewhere, maybe it was on Twitter, that a guy had, in Argentina, had invested a big chunk of his savings in Dash. And so, the funny thing is that even what some people call, non-Bitcoin, some of the altcoins aren't as high quality, but even having your wealth in something of lower quality than Bitcoin still saved you.
Oh, yeah.
Basically. And sort of in a way, that is a sort of gold, in a way, a sort of gold proxy.
It is amazing, actually, how much governments store in gold, right? That 40 centuries ago, the pharaoh in Egypt built this huge stone pyramid and put a bunch of gold underneath it. The U.S. has a big stone pyramid in Kentucky called Fort Knox, and we store 12 million years of American worker wages under there in gold.
Hold on, let me think about that. 12 million.
12 million worker years is stored under Fort Knox. And so someday, a small percentage of that's going to go into Bitcoin, and it'll start growing. I think over time, Bitcoin will start becoming a reserve currency / gold.
Okay, but you haven't, no governments have, or have some governments
I am not aware of any government buying Bitcoin as a reserve asset yet, but I think within the next couple of years you'll see, smaller, edgier countries do it.
And you're talking more about the countries that have problems with their monetary regimes, or maybe the king who visited you, he
did want to talk about that,
and maybe it really works, and that becomes a test case.
Well, yeah, and I think a client base for that theory would be the countries that complain about U.S. dollar hegemony, right? There's a whole group of countries that are saying, hey, we really wish the U.S. dollar wasn't a global reserve currency, but there isn't another choice right now. Bitcoin and or some future thing like a LIBRA could ultimately end up being a global reserve currency that takes away the U.S. dollar hegemony.
Well, yeah, I mean, as you said before, that's probably something that happens over a long period of time because the world has just become more global. The U.S., in the 50s and 60s was so dominant, their countries barely existed. I find that the language that the gold people have used for, not gold bug language, but the hedge against fiat, debasement, and words like that. The equity guys don't talk in that language, and even the macro guys, not some, but not as much. It's interesting that Bitcoin crowd has appropriated that language, and I think it's connected to this issue of scarcity. scarcity of Bitcoin.
Yeah.
When I mention that argument sometimes to people, they say, well, is it really, yeah, those 21 million units, but can't you just fork off your own one? And it's sort of the same thing. It's open source. It's easy to replicate. So what do you say to that?
Yeah, so that's the super snarky argument. It's like, oh, well, Bitcoin might have a fixed number, but there's an infinite number of Bitcoin copies. And Bitcoin is open source software, right? You could make a copy and make DTAP coin, right? And
right.
If you got
I've got DTAP coin.
Well, but yeah,
I am long DTAP coin.
Awesome. And if you get 50 million people to start using DTAP coin, it's going to be worth $200 billion, right?
Right.
That's the rub, is that Bitcoin's already there, and it already has an enormous network effect, and it already has an enormous number of people using it. So a copy has to, well, a copy's never going to work. A new currency has to have some revolutionary advantage over Bitcoin to take market adoption. So that really is the problem. I was on Andrew Ross Sorkin's show, and he was super negative on Bitcoin.
Yeah.
And he used the same argument. It's like, my wife and I were walking down the street yesterday in New York. We saw some guy had his own coin. And so we decided we're going to do our own coin around the kitchen table. And I'm like, I got a better idea. Photo sharing. If you and your wife can get 2 billion people to share photos on your website, it's going to be worth a lot of money, right? And that's really the thing. It's like Bitcoin already has 50 million people using it. It hasn't broken for 11 years. Like, it's hard to compete with that.
I agree with you. I think the arguments are spurious. In the community, there's a lot of focus on this, this scarcity model that's out there. And I think that's just one component of it. I think the space tends to get very focused on certain narratives and then forgets everything else. And so as much as I am very bullish on gold, and I think its preponderance doesn't disappear, I don't think Bitcoin is impacting it negatively. I certainly don't think that people who own gold will drop gold to buy Bitcoin. There is some generational shift. I think that maybe over 20, 30 years, the 35 and under crowd say, well, I see that more as a store of value, and I don't know what to do with gold. So the mental framework, the mental model I have is that they're cousins, and that they sort of work together. That language of Bitcoin really should speak to the gold people first. So I think the early adopters, a lot of them have been sort of people who are gold affinity.
Well, yeah, and gold is not quantitatively easable.
Right.
That's the whole point.
Well, right.
Is that
bringing it back to macro,
in the day,
the global macro.
You used to be able to exchange a $100 bill for 3 ounces of gold. That was a commitment of the government for 180 years.
Right.
And then they broke that and, ironically criminalized the possession of gold. You could wander around with uranium, plutonium, all that was cool.
Right.
But if you owned gold, that was illegal.
Right.
And that's essentially what's happening here is, Bitcoin's not quantitatively easable. And it's no surprise that it now takes $4,000 to buy 3 ounces of gold because they've printed a lot more dollars.
Right,
so if the quantity of dollars goes up, it takes more of them to buy a fixed unit.
Yeah, so let's talk a little bit about that. I mean, that's the global macro. And I think a lot of people in the Bitcoin space, they're technologists.
Yeah.
And they don't really understand that. So within the context, so people might say, well, why Bitcoin now? So how much of people's interest in Bitcoin do you think is driven by negative interest rates around the world and the policies of the last 10 years? Like, would we have Bitcoin anyway?
Oh, yeah, that's
or
a great
not?
question. No, Bitcoin, attempts at what's now Bitcoin were made over the last 40 years. Hashcash, Gold, or BitGold. There's a lot of things trying to be Bitcoin when we were in high interest rate environments, low interest rate environments. So it was going to come anyway. But given that we have low and or negative interest rates, it just makes assets like Bitcoin that have a high likelihood of going way up, all that much more attractive. And you're talking about the low storage costs of gold. There's a storage cost to Swiss francs now, right? They have negative interest rates.
Right.
German bunds are like negative 25 basis points. That's the storage cost of your money. You're giving them euros and paying them 25 basis points a year just to give you your money back at the end. And I guess there's an Austrian bond that's trading $170 a face.
Yeah, I know the bond.
You're paying $170 to get 100 back in 100 years, right? Like, you're paying a huge storage cost for money. And again, Bitcoin's neutral. There's no storage cost. You buy it, You hold your password wherever you want to hold your password, and it doesn't cost you anything to store it. And even now, you can start lending it out, and there's a 6 or 8% yield you can get on.
Yeah, so talk about that. I wanted to touch on that a little bit, the whole DeFi world.
Yeah, so that's...
people don't realize that you can earn a pretty chunky interest rate on Bitcoin.
Yeah, so projects like Maker have already got a couple $100 million of loans outstanding where people are collateralizing it with crypto and borrowing money.
Can you just explain how that works? Because I think people don't understand.
Decentralized finance is essentially taking the middleman out, the bank or the credit card company or whoever, and it has two huge features. One, it's cheaper, so you don't have to pay all the infrastructure. And the other one, it's open 24/7, right?
Yeah.
If you want to borrow $400 Saturday at 4, it's tough, right? Whereas in Maker or these Compound, other DeFi applications, you can do it any time of day, anywhere. You don't need to be physically in the United States or wherever. You can do it from Indonesia or wherever. And you're collateralizing with crypto, you're borrowing money, and you're able to access, borrowers and lenders are setting rates. The kind of similar thing is then lending of crypto via like stock lending in Wall Street prime broker type model. That now yields about 8%, so you can...
How are they getting 8%?
Well, because people who want to short crypto need to borrow it. So there's a market for people that want to, just like the old days of shorting stocks, you need to check the borrow and attain it. And that's giving a yield on borrow. And then there's also transition out of proof of stake protocols. Bitcoin, obviously proof of work. It's a huge amount of computing power and electricity. But most of the newer protocols are proof of stake, which is essentially one share, one vote, rather than one CPU, one vote. And it's much more similar to the securities markets.
So you just lost like 90% of the people who are just about to buy Bitcoin.
Yeah, exactly.
Proof of stake and CPU, and then all of a sudden everyone over 50 just like hung up on this, on this video.
In one sense, some of the new coins pay you a yield for owning them. It's called proof of stake or proof of work. And so you get a 6 or 8% yield, essentially just for owning the currency itself.
Yeah, I think that's phenomenal. And one use case that is not discussed that much is that I think Bitcoin could end up becoming the world's savings vehicle. So if you're in one of those African countries and who knows, okay, the currency's unstable, or if you're in Switzerland with minus 75 basis points, you say, hey, you know what, I'm going to hold, let's just say even 10% of my cash deposits in Bitcoin and earn a 5, 6, 7% yield. I think there are people out there who are, they're the unbanked, but also people earning no savings. It could be that that's what Bitcoin turns into, rather than something else. It just becomes a global savings. If the interest rate is really, scalable, because I know it's not that big at the moment, but that's an unbelievable possibility in my mind, because it restores a philosophy of savings in a world, where we have QE and everyone is expected to leverage up because the rates are zero, so of course you want to borrow. This is the opposite, and that, could usher in a change in the way people think and behave, right?
I agree.
Is that, but is that too far? I mean, some people really, look at the philosophy of Bitcoin and maybe it's where it is in terms of its cultural importance. Does that make any sense, or is that just a bridge too far?
No, it does. And the real beauty of Bitcoin and crypto generally is everyone sees different things in it. Some people are in it 100% for libertarian philosophical reasons.
Right.
Some people just want an 8% yield, right? And some people want to do, wealth savings if they're, say, a Chinese national and they don't trust that their banks are solvent, or that when the currency is starting to devalue, they might get their wealth, wiped out. So everyone sees different things in it, and yield, I think, is one of the next ones where you can imagine funds starting up where you raise dollars from normal, hedge fund type investors, and you invest it in a basket of, yielding cryptocurrencies. And again, it's only 6 or 8%, so it's not 235% a year. So you're not getting but you're not having any downside.
Though.
Yeah, you could do it in a hedged way where it's just a fixed income style vehicle.
Right, and I think maybe that's a great place to end, because Bitcoin, I think its strength is that it's so many different things, and so some of those things can fail and it can still be awesome, but it's also its weakness, because in trying to explain to the people who are on the outside what it is, it's extremely confusing and complex, and people are probably saying now, well, like, what do you mean it's all those things? And I think it'll take time and work and research, and hopefully you'll be out there spreading the good word, and me too a little bit, and people will come to realize what I think we both think is certainly the greatest macro opportunity that we've seen in our careers.
Yeah, and so I find that when I'm trying to explain Bitcoin to people, everyone has a different perspective, and the kind of aha moment happens in a different way with different people. And so the way I think about it is, some people call it a commodity, right? The CFTC says it's a commodity.
Yeah.
The IRS calls it property. People call it digital gold. It's a payment rail. It does all these things. And I just kind of cycle through each one of those until it clicks, and you can see the person ultimately gets it. And the reason it's such a great investment, it's like the miracle whip of finance, right? It just does all these different things.
Dan, thanks for being with us. I think the Real Vision audience is going to be thrilled. Lots of great nuggets there. Thanks for being here.
Thanks, Dan.
Yep.